think at this stage you can begin to show the Soma savings plan. So perfect. So we have a Soma savings plan, which is an innovative product that is both a savings and insurance product that you may want to consider. So we can go to the next page. So in terms of an overview, the Soma savings plan, as the name depicts, is a life assurance and savings product that covers against financial loss due to death and permanent disablement. So what we are saying is that the beauty about this is that we are saying that you are having a product that provides you with a savings avenue, but also provides you with financial protection in the event of death or permanent disability. What is permanent disability? Permanent disability in the insurance sense is regarded as total loss of sight, total loss of, so you are not able to see, total loss of hearing, you can't be able to hear, loss of limbs, you lose your legs or your hands and so on, the break of the spinal cord, and so on and so forth. Those ones are considered to be permanent and total disablement. So whom does it cover? It covers anyone and everyone who is interested in saving towards various benefits. And the funeral cover is included, and the funeral cover is on the death of the parent or the child. So how does it work? It works in the sense that you select a sum assured. The sum assured is the amount of cover that you require. So you can select 500,000, you can select 1 million, you can select 2 million, 5 million, depending on how you can afford and depending on what you want to use the product for. So again, what does it do? What it does is that it mitigates against financial loss due to death of the parent or guardian and ensures that their funds are available to be able to pay for school fees. So it acts as a savings tool for the child's education and can also be used to save for other life goals. So you want to take up a mortgage and clear that mortgage loan, Soma savings plan will be there for you. You want to start a business, Soma savings plan can help you to build that. You want to buy a plot, Soma savings plan will help you. You want to buy a car, Soma savings plan will help you. So Soma savings plan is an insurance and savings product that can make you meet those financial goals that you have been dreaming about. So those things that you keep on writing in your New Year resolutions, you can start actualizing them using this particular product. Let's move to the next page. So what are some of the features of this product? So in terms of features, the product is quite flexible because it's able to cover, right from 5 years running up to 20 years. One of the key criticism, I don't know, it didn't come out from that research, but the younger people, the younger generation tend to be a little bit impatient. So they want products that they're able to pay out quickly. So you can have a term right from 5 years running all the way up to 20 years. Minimum age, we go by the entry age. So you can take it if you're 18 up to the age of 65 years. And then the policy, of course, will expire once you are at 85 years. Now, I hope there are couples who've joined this because this will be good news for them. Because if you join in as a couple, we cover joint lives. So we cover spouse, husband and wife, or wife and husband. So those ones, they enjoy a 15% discount on premium. Now, what does this do for you? What it does is that you are already building a savings into the product. by just taking the policy jointly rather than as individuals. So it has a minimum sum assured of 250,000 and a maximum sum assured of 100,000. Now there's a free cover limit of 7 million. What does this mean? It means that when you take this cover, you do not have to undergo any medical exam to be eligible for this cover, as long as the cover you're taking is below 7 million shillings. Now, I want you to tell me your experiences, and I'm sure if you share with me your experiences, I don't know who has gone for a medical exam and their experience. Sophia, have you gone for a medical exam? A complete medical exam?
Actually, not a complete one, not a complete, a thorough one.
So a complete one is where, okay, you're asking what it is, a complete one, or you've gone for one?
I've just gone the usual just checkups, but not a complete one.
Okay. So now a complete one would be that you go there, you ask questions, you fill in forms, they take your blood sample, your urine sample, they check your heart, the ECG, they check your chest, they do a chest x-ray, they check your hemogram, they check the whole blood chemistry, they get your blood also, check how it is. So a lot, they check HIV and all manner of diseases. So that's what we call a full medical exam. So a full medical exam, a lot of us are really reluctant to go for that. And one of the things also that makes sometimes people be reluctant to go for insurance is that they fear to go for medicals. The reason being, and this was a few years back when HIV was a big deal, that insurance companies were reluctant to cover death from HIV causes. But nowadays, that is no longer a problem. So we therefore put a very high free cover limit to allow for a majority of our clients not to have to undergo any medical examination. So next slide. So next is just to tell you that the policy has flexible options in the sense that it can allow you to downgrade when your income reduces. So yes, we go through life experiences. Sometimes you might find that your income is not the way it was. If you're a business person, maybe business is not doing well, COVID-19 strikes. So you can come to us and we will be able to allow you to do some downgrade by reducing on your premiums. Then again, life also has its ups. You might get a promotion, you might get this big deal, maybe there's a new government in place and therefore your business is growing. Therefore, you can come to us and again, we'll be able to upgrade your cover. So you can opt to include some what we call riders or extra benefits. So we're saying that we are offering a long-term partnership that works with you in times of plenty and in times of need. So what are the main benefits of this cover? So there are what we call the core benefits, the main benefits of the cover. So the first one is the maturity benefit. And the beauty about the maturity benefit is that we are providing a guaranteed sum at maturity. So if we tell you that you are taking a policy of 3 million, we're giving you a guarantee that on expiry of the term, we will give you that 3 million shillings. So it's a very powerful way, because if you're planning to use this to pay for university of your child or to go to a particular class, then that becomes something very, very critical, because then you're able to know that this is the fund that I'm providing for. If you want to buy a plot in the next 5 years and you've estimated that you need a particular amount of money, then this money is guaranteed. You'll be assured that you'll be able to do what you want to do. The next benefit is the life assurance benefit, which I've spoken to, which is the fact that we will pay out the amount of insurance in the event of death of the parent or guardian before the policy matures. So, and this is paid at any time. If somebody takes cover, then unfortunately, dies from whichever cause, then the benefit is payable immediately. Then there's what we call the last expense benefit. So this is money that is used to cover funerals. Remember, funerals have become big things in Kenya, and they cost an arm and a leg, and therefore this product also provides a funeral or last expense cover, both for the parent and also for a child. Then we have what we call additional or optional benefits, but I would encourage us to, as much as possible, include the additional benefits, because these are the things that enhance the cover. So if you're going to wear a dress, or you're going to wear, let's say you're going to wear a dress, you complement it with accessories, and also, so you accessorize it to make your look become even much better than just wearing something plain. So this product has additional benefits, and the key additional benefits here are permanent total disability benefits. Again, I'll tell you that this is a major benefit, because you never know what life has for us, and we have to prepare for the good and also prepare for the bad. So the benefit of the permanent total disablement benefit is that it pays out in the event that you are permanently and totally disabled, as I had explained earlier. Then we have the double accident benefit. So this one allows for us to double the sum assured in the event that death occurs from an accident. We don't pray for accidents, but when they do happen, they do cause a lot of disruption. So for those who take up the cover, then we have the double accident benefit. Then we have another important benefit to consider, and this is the critical illness benefit. Now, remember that in our current society, a lot of people are suffering from critical illnesses, such as cancer, heart attack, stroke, major organ transplant. And this cover then provides an avenue for us to pay out 35% of the amount you are insured for, what I'm referring to here as a sum assured. So if you take up a cover of 2 million, then if you are diagnosed with cancer or you're diagnosed with heart attack or stroke, then we will be happy to pay out the 700,000 to you. And the policy continues. Then there is the waiver of premium on retrenchments. For us who are employed, employment, okay, we're employed on what we call permanent terms, but there's really nothing permanent. No, companies could change. They could decide to retrench you, in which case we have an understanding and we tell you, fine, if you've been retrenched, we will allow you 6 months, we'll pay for you premiums for 6 months, so that you look for another job or you look for a business, even as we continue with the cover. So I don't know if at this stage there's any question. I think I want to post there also, just to get your reactions or your questions. We seem a little quiet, so I don't know whether it is. Let me just check out the guys here. It's clear, eh?
Yeah, I'm saying Shadrach here.
Yes,
about
Shadrach.
It's saying the waiver of premium on retrenchment allowed maximum of 3 times. This is like within the period if it happens 3 times.
Okay, we're just saying that you are retrenched once in say 2020. Then fine, you get another job. Maybe your industry is a bit volatile. So again, maybe in 2027, you get retrenched. We shall again allow it. But again, 2030, maybe we allow it again. But after that, now we don't allow any of this to happen now. So we are saying that as much as we are giving the cover, we're just restricting it to 3 times only. Is it clear?
Yeah, thanks.
Thank you so much.
Also,
from the joint.
I wanted to find out, just to correct, you say that during for the waiver of premium on retrenchment, during the 6 months, the client is given a stipend.
No, the client is not given a stipend. For example, you've taken a cover and you're paying 5,000 per month, isn't it? So you're expected to be paying 5,000 every month. So what we do now, the 5,000, we forgive you from paying that 5,000 for a period of 6 months. So every month you don't pay any premiums. We pay it for you. We don't give you a stipend as such, a cash as such. It's like the way there was Corona, and then some banks said, some landlords said that because people are having issues, I'm going to forgive payment of rent for maybe a month or two. So you're staying in the house, but then it's like now the landlord paying for you. They are not collecting rent from you for another maybe 3 months as you settle, and then now after that you start repaying. Is it clear?
Yes.
And then there's a query here on joint life. For joint life, there are fears of insecurity from I knew this would come up. For joint life, there are fears of insecurity from your spouse. How do you handle that? Now this is a social maneno. You know me now, I'm an insurance person. So these ones.
But it comes up. It comes up.
It comes up and it is major. I know it comes up a lot. So this is an aspect of trust. Again, and that's why some people, even for the cover that is given by the employer, there are some people who are so scared wanaogopa hata kupeleka hiyo nini nyumbani, hiyo certificate kuonyeshana wako na cover fulani, kwa sababu hiyo cover ya employer inapanga kubwa. Kwa mfano mtu anapata 300,000, cover yake inaweza kuwa 300 times 12, which is 3.6, or just say 4 million times 4, 16 million. Can you imagine a guy getting 300,000 has a cover of about 16 million? Na mtu ameandika spouse. Sasa kuna ule mtu anaogopa akienda nyumbani mama aone ama bwana aone kuna 16 million, anaweza anza kufikiria maneno mengine. But we all live by trust, because ultimately these are people whom we've gone into contractual relations with, and we expect to live together for better or for worse, and they are better alive than if they are dead. So that's a societal issue, but we can handle it by also indicating that in case you commit murder, and this is how we handle it, in case someone commits murder, then that person, even if they were the beneficiary, cannot be the ones to benefit from the cover, because that one is against public order, good public order. So in case someone commits murder, imagining that they're going to benefit from a cover, then that cannot happen. So in medical, we have options for switching spouses when things go wrong. Does this apply in life cover? So under the beneficiary arrangement, you can change beneficiaries as and when you feel like. Under the joint life cover, it's a bit tricky, because then you'd have to split the two covers, and then now each person now will have to have their own cover. So that is that's a bit tricky, but that's just the practical way in which it can be done. Does it shed some light, please, or is it still fuzzy?
No, it's clear. Thanks.
Thank you so much. So those are the key benefits. I think you would be keen to be able to know about the permanent or disablement benefit, about the critical benefit, because a lot of these diseases never used to be so common, but you'll agree with me that they are becoming more common. Cases of cancer, cases of stroke, cases of renal failure, they're becoming quite common, even among the younger generation, unlike the way it used to be that they were affecting people only who are at very advanced ages. So in terms of extra benefits, I don't want to go into a lot of details, but suffice to say that the key thing to remember is the key benefits that are provided, and the key things to remember is that the policy allows for changes as and when that may be required. So I think just go up to slide number 10, please. Slide number 10. slide number 10. So for us as consumers, the most important things about this product are these three things. Number one, the product is simple. Why is it simple? We provide a guaranteed benefit. Why is it simple? We have 4 riders or additional benefits that speak to the need. Remember the additional benefits that we are saying? We're talking about the permanent disability, the double accident benefit, the critical illness benefit, and the waiver of premium benefit. Then the other thing to remember is that this product is very affordable. Why is it affordable? Because we allow even people who have premiums for as little as 1,500 shillings to be able to take it up. Then you notice that when we give you a quotation, in some cases, you might even be able to get up to 2 times the premiums you pay at maturity. Then there's the last expense benefit to be able to pay for funeral expenses. Then, of course, we have the 15% discount where we have joint covers. And if you are a business person, this again is a very sweetener. If you are able to pay us on an annual basis, then we give you a 2 months discount on the premium you pay, which means that you're building your savings even much more. The third key item to look at is in terms of flexibility. So what do we mean by flexibility? Unlike the olden covers that were quite rigid, we're quite flexible because we allow you to change, to make changes depending on your circumstance. So you can upgrade, you can downgrade depending on your circumstance. And then we can allow you to select escalations. What do I mean by escalations? Because of the inflationary pressures, you can choose to put in an increment that allows for the amount of insurance to keep on growing and building up so that you're able to take care of inflation. So I think for all those so many words, that is what I thought I would share with you. So thank you so much for